Good afternoon, traders. This is Kevin Craney with RJO Futures with your afternoon financial market update. Cash equity markets trading higher on the day for much of the day, even in the face of more bad macroeconomic data here out of the United States. Really, when we look at data across the board, jobless claims up quite a bit here. There's a lot of noise in jobless claims right now, some of that having to do with auto manufacturing factories, so it's very hard to get a real good read on just where the employment situation is. But still, that data point is showing that they were up, which is not a good thing. We also look at existing home sales that had an unexpected decline, and that really is disappointing in the face of some housing numbers that we've been getting that have actually been the real bright point here lately. But then we look at leading economic indicators. We see a contraction in those down about a negative 0.3% from a positive 0.4% before. So that just adds to the confirmation that the economy really is slowing with those leading economic indicators. Likewise, then we see Philly Fed manufacturing numbers that show continued contraction in the Philly Fed region as well. What's that amount to? Markets rallying off of that and turning bad news into good news, because the expectation is that the Fed will have to step in, and it may be sooner rather than later. So that's why we're really seeing these equity prices trade a little bit higher. When we look at the interest rate side of the equation, interest rates, actually the yields ticking up just a little bit here on the day. The 10-year up at about 151 basis points and the 30-year at about 260 basis points. So when we look at the futures, we see the futures prices are trading down just a bit. Again, butting up really against some moving averages, some very short-term moving averages, right around those 14-day moving averages on both the 30-year and the 10-year. Probably looking like good areas where you could buy back in, because I do think you're going to find a lot of support before the Fed is willing to jump in and act. I don't think you've seen enough bad data and enough slowing yet that warrants the Fed to act, although they have stated loud and clear that they will act when needed. At this point, I think you continue to find a lot of support in bonds. When we look over in Europe for the day, we did see a 10-year Spanish auction on the day. Bad auction went off, bad bid to cover. Likewise, you see Spanish yields well over 7% on the day, ended just back below that. But again, hard for a country to sustain yields over 700 basis points. And we do have a meeting out of the European Union tomorrow, supposedly to sign a pact on the Spanish banking bailout. So I think some markets will be watching that just to make sure everything goes smoothly. Likewise, we'll get some data, some inflation data out of Germany tomorrow, CPI data coming out of there. So that'll be something to watch as well for the inflation numbers in Germany. Here in the United States tomorrow, the calendar is wide open, no data coming out of the U.S., so be interesting to see how the day shapes up with a lack of data to point us in any real direction, given the climb in the equity markets we've seen this week. I would look for a little bit of a sell-off and more support going into the weekend for the interest rates. This has been Kevin Craney with RJO Futures. Please give me a call, 888-596-5817. As always, remember, futures are not suitable for everyone and do carry a high degree of risk.